$3.26 million. Fascinating to see where the public count is at right now, considering that portfolio was at $2.5 million just back in April, a little over a month and a half ago. Absolutely incredible. Congratulations, a big congratulations to everyone that was out there buying in March, and especially that April dip. We got there in that first couple weeks of April. Obviously, market drama going on. Congratulations to all you guys that got phenomenal deals. I mean, many of those stocks are now up 20, 30, 40, 50, 60, some even up 70, 80, 90, and even 100% since where they were about a month and a half ago or just around 2 months ago. So congratulations to all of you folks out there. Also, congratulations to the folks in my private stock group. We just had 17 people. 17 people joined the six-figure club, and one person joined the seven-figure club just this past week. I had to sign up all those words. If you didn't know, my wife's the one that actually sends them out, but I'm the one that signs them all up. So congratulations to you guys. Everybody out there hitting new records, 6 figures, 7 figures, 8 figures, or maybe for some newer investors, maybe you just hit 5 figures. I'm sure there's some people watching this video right now that just in the past week or two, you hit 5 figures in your portfolio for the first time ever. So congratulations to you guys as well. A milestone is a milestone, right? Already in this video here today, we got 4 stocks to talk about that I believe are great buys right now. No, we're just great buys back in that April dip. No. Great buys right now. And we're going to go through why I believe those stocks are great deals right now. Additionally, only one thing only I need from you guys. Smash that thumbs up button. I hope you can do it for me, man. It's been a heck of a last few days for me. All I need is one smash of the like button. And if you want to subscribe to the channel, you can certainly subscribe to the channel. Hope you enjoy this one here today. Also, I'll give an update. I didn't announce this publicly, but I did announce it to members of my private stock group and my Patreon as well. Just to kind of update everybody on that situation. My dad had to have emergency surgery. That was on Thursday, so my mom gave me a call, and basically I left Vegas right away and went out to Phoenix, Arizona. Obviously, I was hoping to make it before his surgery happened, but everything just went so fast. They ended up putting him into surgery before I could even get out there, and it's about a 4-hour drive. So he did make it through that surgery. It sounded like it was a scary situation. It sounded like, honestly, like a coin flip, type of deal, just to be quite honest, if that was even going to work. But he's in recovery. It's going to be a long recovery in regards to that. And, obviously we talk about money all the time on the channel, right? Money, stocks, making money, all this stuff, right? Investing. One of the most overlooked things in the whole money situation is a situation like what happened on Thursday. Because I'm fortunate to be in the financial situation I am, been grinding on this for 15 plus years, right? I didn't have to worry about putting in for vacation days. I didn't have to worry about, is my boss going to let me go? No. I got that call from my mom and I left right away. Gone. No worry about are they going to give me the next few days off from work or things like that, right? And so when you build up to bigger amounts of money, it's not just about the next house, the next car, the next watch, the next fancy vacation. All that stuff's cool. And that's cool that it comes along with, the money. But a situation like that, when you can just be something's happening with a friend or a family member, something, and I got to go and I got to handle this situation and I need to get away from everything work related for a while here, and you don't have to worry about, what somebody's going to say or whatever, and you just can live life on your own terms. To me, that's pretty valuable, because obviously there was definitely times in my life that, wasn't like that, especially early in my working career, right? It was like a whole process to try to get days off, and you couldn't do it, and, So anyways, guys, always remember stuff like that's really important. And remember, that's part of why we care about building our wealth and, getting to great financial positions and things like that, okay? Alrighty, let's get these 4 stocks, okay? First one of these 4 up here is Adobe stock. So this is a really fascinating stock. It's $400 here today, right? And this is a stock that's basically done nothing the past 5 years. Now, obviously, great company. They've increased their revenues dramatically the last 5 years. They've increased their net income dramatically over the past 5 years. But Adobe's a really fascinating situation of when a high valuation reaches a situation where suddenly over the next few years, a cheap valuation emerges, and it's on back of a new risk that comes to the business, right? And so if you look at Adobe 4 or 5 years ago, it had a very rich P ratio. Like, look at the P ratio back for Adobe back in those days, a forward P ratio, very high. And suddenly you have this worry about AI, all these new AI photo services, video services, right? And remember, Adobe's got several different products and services in the market, but they make a lot of their recurring revenue from photo-related editing services, video-related editing services for influencers, creators, marketing experts, right? Advertisers, all those sorts of things, right? And so obviously there's a lot of innovation happening in AI right now, and there's a worry about like, how's this going to affect Adobe's business model? Maybe this hurts Adobe's business model, right? And so that's a real thing that's going on out there right now, right? Now, my pushback on that is, one, if you look at Adobe's revenues, look at their net income, this company has plenty of money pouring into them constantly to invest into their business to create new products and services and make their existing products and services better and better and better. I've looked at some of their product offerings in regards to AI. It looks the best of the best. If you want to talk about the creme de la creme, because I've played around with a lot of these different photo, AI generators, video AI generators, right? And, some are really bad, really bad. Some are pretty respectable. From what I've seen from Adobe, it looks about the best you're going to find out there in the marketplace, bar none, right? And so that's great, right? So they can continue to invest in their business to, fight off new competitors, new entrants, things like that, right? Also, remember, this grows the TAM exponentially, what's going on out there in regards to all these AI products, right? Additionally, if let's say there is some, new service, photo editing, video editing, something in the marketing space, advertising space, right, that pops off, Adobe can always buy those companies out, right? Like, Adobe has a long track record of buying out other businesses, and so they can make that happen, right? They couldn't do the Figma acquisition a few years ago. The Biden administration blocked that, but I think they could get a lot more deals done if need be, which they might not even need to do that. But if they do need to do that, and let's say they need to buy out some fast-growing app for $100 million, $1 billion, $2 billion, right? $500 million, whatever the number is, they can make that happen. That's a piece of cake for them, man. They got so much money pouring in this business all the time, and then all of a sudden they got a new growing business. So do keep that in mind, right? It's not like competitors just compete. Eventually, founders start to weigh the risk of like, well, could Adobe launch a product that competes directly with us? Do we want to go to war with Adobe, or should we just sell out for a fat dollar amount? Remember, a lot of these founders, these AI startups, a lot of them had no money. And then all of a sudden you could have a $50 million, $100 million, $500 million valuation. A lot of times you're going to take that, right? Now, additionally, look at what is expected here. Looking at 1000xstocks.com, look what's expected to happen to Adobe's earnings per share here over this next couple of years. Should be very, very fun times in regards to Adobe's growth in their earnings per share. Like, this is going to be a fun time period in my opinion, right? Now, additionally here, if you look at the valuation matters considerably. Adobe, I think two of the best comps to comp Adobe against is Microsoft and Intuit, because both those business models are very well-established business models that get, great recurring revenue streams that you look at as just stable business models. They got small businesses that use and mid-sized, large businesses. The same exact thing with Adobe, right? Look at Adobe's forward P. Adobe's forward P is 20. If you look at Intuit, 44. Microsoft, 32. I would say Adobe is at least 50% undervalued right now, meaning this stock should be at least 50% higher just based upon valuation. We're not talking about future growth over the coming years. We're not talking about this company's revenues and earnings per share 5 years from now. I'm just talking about the company you see in front of you today should be 50% higher. I think that's very fair. I think it's very fair to assume they should have a forward P a little under Microsoft, assuming Microsoft should be able to outgrow Adobe a slight amount over the next few years, right? And, assuming Intuit could, pretty substantially outgrow the earnings per share. But remember, Intuit trades at a 44 forward P, right? So 50% undervalued this company is right now. Now, the CEO of this company, this man's been leading the company since 2007. From my understanding, he worked at the company since 1998. He knows this company inside and out. He's gotten them through multiple cycles, right? You think about the You think about the mobile revolution, which obviously was a huge change to Adobe. You think about their business going from being like a one-off, like you buy the product one-off, versus they changing it obviously to a recurring revenue stream business model, to a subscription business model. That was a huge change. So this man's been through several fundamental changes in Adobe's business model, and obviously acquisitions and bringing those companies in and all sorts of things. So you got to always think, I'm going to invest in a stock. How comfortable do I feel with the CEO? Yeah, this man's been doing a tremendous job at Adobe for decades, right? Now, additionally, you look at the employee count of this company. 30,000 employees. Now, I think about AI, and I think about how AI should transform businesses over the coming decade. And if anything, I think it should make a lot of companies like an Adobe a lot more efficient. So when I see Adobe with 30,000 employees, the first thing I think is I don't foresee them having to do mass hiring over this next several years. I just don't see it. I think they could keep that employee count steady, or maybe even drop that employee count for the next 5 to 10 years. And so therefore, I don't see them needing to massively increase their expense base on this company. I just don't see it. Not with the way AI and these AI programs are going to help a lot of roles. I mean, I'm even hearing, I think it was Microsoft recently mentioned something around, this is really important. I don't think people understand this. Microsoft mentioned recently, if I recall, it was Microsoft, 30% of their code is now being written by AI. What do you think that is 5 years from now? Where do you think that is 2 years from now? 10 years from now, right? Imagine how much of the code is going to be just written by AI. I mean, this is really, really substantial, right? Really, really substantial. Now, additionally, Adobe stock's very cheap right now, which means what? It's a great time to do what? Share buybacks. Great time. When your stock's trading cheap like Adobe is, do share buybacks. They announced last year that they got a $25 billion stock repurchase program. And so think about all the shares Adobe's gobbling up right now at very attractive prices. Very attractive prices. So if you're somebody that wants to buy Adobe stock right now, which is, definitely one I'm interested in, it's a great time to be buying, because you're also getting to see the company buying back shares as well at these very cheap prices, which is going to help earnings per share immensely over the coming years. Because remember, their net income should increase quite dramatically over the next few years. But then you take a bunch of shares off the market, your earnings per share can have extremely strong double-digit growth year after year after year after year, right? Now, one last thing I'll say about Adobe, and then we'll move on to stock number 2. This is a sleep well at night stock, in my opinion. I can sleep very well buying the stock and holding the stock. It's the opposite of like a home builder, right? Home builder, it's an up and down business. It's hot one moment, it's cold the next moment, right? And for Adobe, like whatever happens, tariffs, right? Recession worries, inflation worries, deflation worries, oh, the economy's growing faster than expected, Trump, blah, 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 whatever. At the end of the day, Adobe's going to put up their numbers, and that money just keeps coming in. And so for Adobe, I really like this one. I think it's a great buy now, and one of those stocks you can just feel comfortable holding. It's not like it's going to keep me up at night, right? Before we get to number 2 of 4, for the pinned comment down there, I'm going to put a link that is if you need to apply to join my private stock group, get access to all my premium courses. If you're ambitious about scaling to 6 figures, 7 figures, 8 figures, you want to join a group of investors that are doing that are on that pace, those sorts of things, you can click the pinned comment down there, fill out a form, see if it gets you access to all my premium courses, access to exclusive weekly videos from me, my private Discord chat, all that good stuff, and all those awards I was signing there. The 6-figure awards are this one. I send this to your house complimentary when you hit 6 figures plus in your portfolio. And then I send you a 7-figure award when you hit 7 figures plus in your portfolio. And we send that complimentary to your house. I spend probably 5 figures a year shipping just awards around. And also your Steel membership cards. When you join us in the private group, I send you a Steel membership card for the private group and a Steel membership card for 1000X as well. Okay, so that will be pinned comment down there. And let's get you to a much higher level and then with a great group. Okay. Number 2 of these 4 stocks up here is Advanced Micro Devices, otherwise known as AMD. $114 stock here today. Stock's up about 115% in the past 5 years. And I think it's going to be up a whole lot more than that over the next 5 years. I think that's just a little child's play. Okay. No, in regards to AMD, you got to understand the fun is just about to start in regards to this one. And the reason being is the MI350 is likely starting to go into production. So, the next quarter they're about to report, that could have a very, very small amount of MI350 revenue in there, like very, very small. But the next quarter, we're going to start to see, in my opinion, based upon everything that's lining up here, massive amounts of MI350 revenue. And then come the following quarter, let's call it winter time, oh my gosh, we're going to be talking about some epic numbers, no pun intended, in regards to the MI350 series. This is a huge deal for AMD. This is their first, the MI350 marks the first real big like entrance into AI, in my opinion. Not to say there are other products haven't been toward that way. No, this is just a whole level up in regards to MI350 here. No, in regards to this, AMD, this was actually 2 earnings ago. Lisa Su mentioned something around the lines of tens of billions of dollars coming from the AI GPU lineup over the next few years. Now, she didn't say billions of dollars. She didn't say $10 billion. She said tens of billions of dollars, which would mean minimum $20 billion, but potentially $30 billion, $40 billion, $50 billion, $60 billion, $70 billion, $80 billion, $90 billion. It's a big number, right? So this is a huge opportunity. It's not like this is just, this is something that can help AMD increase their business a little bit. No. This is something that will be fundamentally changing NVIDIA's numbers over the next few years. Now, it's very obvious. Everybody likes to compare AMD versus NVIDIA, right? And then what's the MI350 versus NVIDIA Blackwell and all those sorts of things, right? And how are these going to compete against each other? Well, as far as the MI350, there's one that's going to likely go in production right now as we speak, right? And you're going to really start to see the numbers in the back half of this year. When it comes to MI350, AMD says it has a 35x improvement, 35-fold improvement in AI inference performance. Now, that's very important. Inference is when you're actually using the AI. It's not just about training the AI, right? Because it's one thing to train AIs to understand things and like learn better. It's one thing to actually utilize the product, right? 35-fold improvement in AI inference. And Lisa Su talks about the companies position themselves very well for inference, right? Compared to the MI300X, that's massive, right? Not against some old chip from 100 years ago or something, right? This indicates a major generational leap in performance and positions the MI350 as a strong contender for demanding AI workloads. Additionally, high bandwidth memory. It offers approximately 22.1 terabytes per second memory bandwidth, enabling faster data processing and improved performance for memory-intensive tasks. This capacity and bandwidth clearly outpace the NVIDIA Blackwell B200. Now, additionally, when it comes to value proposition here, one is, from my understanding, AMD is going to undercut NVIDIA's price. That's from my understanding, right? The other part is, from my understanding, these AMD chips should use less power. Now, if you know, one of the biggest constraints in regards to these data centers is power related, energy, right? And so there's a potential that these AMD chips are going to be much more energy efficient, which could drop costs immensely for running these data centers, right? So that's just something to keep in mind here. So there's definitely, this is, in my opinion, once again, the first real super competitive product for AMD. But that's just the start. Remember, next year, the company's expected to launch the MI400. The MI400 is a blow off top, okay? That's a blow off the top chip. I don't even want to get into that one yet because the MI350 is just about to hit and we're going to see the numbers come through for that. But MI400, whole new level up in regards to this game. And that's when numbers start getting really crazy. But that will be more of a back half 2026 into 2027 in regards to that matter, okay? Now, keep in mind, a lot of people like to, compare these companies. That's why I brought up AMD and these MI350 versus Blackwell chips and whatnot, right? And people are going to keep comparing them. Well, what about the MI400 versus whatever NVIDIA's, best chips are at that particular time, right? And then they're going to be talking about the CUDA software, and they're going to be, they're going to talk about all this stuff. But at the end of the day, you got to understand, NVIDIA's a $3.3 trillion market cap. AMD does not have to destroy NVIDIA to have the stock perform tremendous over the next few years, right? NVIDIA, in my opinion, and this is coming from somebody that has owned NVIDIA stock in the past and made tremendous gains on this stock, okay? I don't own any NVIDIA now at this point in time. Not this bad company. Not that AMD is going to destroy NVIDIA. Simply because NVIDIA is about to move into, starting in the second half of this year, they're going to move into their slower growth era, which is not bad. It's just going to be a slower era of growth in regards to their growth rates for this company. And then it's going to last for the next 5 years, in my opinion. That's going to be a 5-year, slower growth time period for NVIDIA. Doesn't mean AMD is going to completely destroy those guys, right? No, AMD is about to start having the hype. And that's really going to start next quarter. Not this one they're about to report in a month and a half, 2 months from now. No, I'm talking about the next quarter. Because that's going to be the one that starts to have a lot of MI350 revenue. Because that will be a July, August, September quarter at that particular time, right? Which that quarter will probably be shown off and announced probably around Halloween, okay? That's a quarter I'm talking about. So there's already going to be starting some hype and excitement building into that quarter. Because remember, that quarter, they're going to give a guidance on this next quarter. So this next quarter that's going to be coming out in a month and a half from now, they're going to give a guidance number for that Halloween quarter, the one they're going to report around Halloween. And it's going to be scary. Scary in a good way. Because, oh my gosh, are they going to have some revenue growth talk about at that particular time, right? So they're going to give some guidance, and I'm just telling you, the hype, the excitement, everything's going to build massively at that particular time in regards to AMD. And we're going to be talking about, the hype and excitement NVIDIA had, that's going to start to transform over to AMD essentially. And I look at next year's revenue growth that kind of analysts have here, I think they're way off. I think they're way off in regards to AMD's revenue growth. Let me show you projections I have for AMD, my bull case for AMD. Okay, so whenever I go to buy a stock, I run a bull case, base case, and bear case. This is my bull case for AMD. So bull case for AMD would be 30% revenue growth from 2026 to 2029, right? Per year on average. Now, some years could be far above that. They could have 50% growth some years. Some years will be below that, right? Net income growth on average, I have 40%. Now, that puts them at 25% net income margins, which is a mile and a half below NVIDIA. Not even in the same stratosphere as far as net income margins, right? 30 to 40p would be very fair if you're growing 30% revenues a year and 40% net income, that'd be just ridiculous. On average in that, a 30 to 40p is so low. But it's a semiconductor company, so there's always people saying, this is the end or something, right? So that would put the stock in 2029 somewhere between $427 and $569, which gives you a compounding annual growth rate of, let's say, 40% or more. The stock's 114 today. I like my risk reward. Now, I obviously, my base case is stepped down from there, but the risk profile is so attractive in regards to AMD, it's ridiculous, right? Now, keep in mind these numbers that I have, right? This is my bull case. So that would put the company at a little over $90 billion of revenue come 2029 and $23 billion net income. Look at where NVIDIA is expected to do this year. This year, not in 2029, this year. $156 billion of revenue, $80 billion net income. So once again, even AMD in 2029 still won't even be remotely close, in my opinion, to where NVIDIA is right now. And that does not mean AMD's bad or NVIDIA's bad or anything like that. It just means you got to understand each stock is its own case. And there's just immense upside ahead for AMD here, right? The fact that they're going to grow so immensely, in my opinion, over this next 4 or 5 years, and they'll still be way under NVIDIA's revenue and net income. Now, imagine if they could get their net income margins anywhere close to NVIDIA. Could you imagine what AMD stock price, we could be talking about a 10x stock, if that's the situation. Maybe not a 1,000x stock, but a 10x stock, right? Now, keep in mind, we haven't even started seeing MI350 revenue, right? MI400, no. And look at the latest revenue number. They increased revenue 36% year over year. 36% before MI350, before MI400. Imagine the sort of revenue growth numbers when MI350 starts hitting later on this year. And then imagine toward the end of next year when MI400 starts hitting. Woo! Because I bet you for those MI400s, they're going to get a big dollar amount for those guys. They're going to get a big dollar amount for those guys. Maybe not, once again, as high as NVIDIA gets, but it's going to be, my guess is, a much bigger dollar amount than the MI350. So do keep that in mind, right? So AMD, extraordinary opportunity here. For those of you guys that do join my private stock group over this next few weeks, if you care anything about AMD, definitely join us in the AMD chat. A lot of AMD investors in there, a ton of AMD investors in there. We're always sharing the latest news that's going on in regards to AMD, opinions, perspectives on the stock, right? And so definitely do keep that in mind, okay? Stock number 3 of these 4 up here is Cheesecake Factory. So Cheesecake is a sneaky winner chicken dinner. Stock's up 159% in the past 5 years. If you look at the stock performance just over the past year and a half, it's been tremendous, right? And, this is a sneaky under the radar kind of restaurant play, because when you think about higher growth, like stocks that go up a lot in the food related space or drink related space, people are going to think of Cava, they're going to think of Chipotle, and they're going to think of Dutch Bros, right? And cake just kind of flies under the radar, but the stock's an absolute beast. And I think there's a long way for the stock to go from here, right? Which is why I'm buying the stock across basically every single portfolio I have. If you see the position I now have in the public account, it's a $179,000 position, which is pretty substantial, right? That's we're up $49,000 in the stock, does not include dividends received from it. But if you look at my private portfolios, you look at the Patreon portfolio, every portfolio I'm building the stock very immensely into a very big position. And the reason being is they basically have 2 banger concepts. One is North Italia. You're going to see those expanding. You're already starting to see it in a lot of major cities, but you're going to see it in a massive way over this next 5 years. But basically in North Italia, they took Olive Garden and they said, what if we made the food way better? Like way better. And what if we made the restaurants have an actual modern look and not like you went back to 2002, right? And we sold at higher price points. What if we did that? And that's exactly what they did with North Italia, and it's an absolute banger hit. Every single one of these locations I've ever seen and gone to, which I've gone to many of them now at this point in time, busy. Like every night they're packed, the weekend's extraordinarily packed, right? And that's even with all the stuff about the consumer and consumer confidence being low and all that stuff. North Italia puts up numbers, man. Absolutely phenomenal. Then they came out with Flower Child concept, right? Which, the Flower Child concept is basically, it was almost like Fox Restaurant Concepts kind of thought like, could we create a Chipotle, but not like Mexican food, but something that would be seen as healthy, good for people, and would be a relatively lower price point, right? And people would view as higher quality. And that's what they came up with Flower Child. And so this is what the dishes at Flower Child look like. Now, for you, those of you that don't eat a lot of vegetables and things like that, you might not like Flower Child, right? You might say, give me a Burger King cheeseburger, baby. I need a Whopper. I need a Big Mac attack so I can have a heart attack. No. So, Flower Child's obviously for people that love to eat healthy, love to eat clean, stuff like that, like Flower Child, very, very compelling concept, and it's taken off across the United States of America. And that has actually a bigger location opportunity to it than, believe it or not, even North Italia, for instance, right? And the reason being is the price points. This is a typical menu you'll see at basically a Flower Child. And what you're going to see is many of their dishes are kind of in that $12, $10, $15 kind of price point. They got their kids meals, which are for kids 12 and under, that are priced at like $8.50, $9 in many other restaurants, right? Which you can get either chicken, steak, and then you get a couple sides with it. Even my kids love that place. So, obviously they have wraps and whatnot, but it's kind of more in price in that $10 to $15 range for the most part for their menu, which makes it so the masses can really afford this place. North Italia, a lot of their entrees are $20 plus, sit-down restaurant. You might get, a glass of wine. You're going to, you're kind of moving up the price point there. Flower Child's more affordable to the masses. And I would say North Italia is a little bit more toward that top 30% of income earners. I would say that, okay? Now, if you don't know, essentially, Cheesecake Factory acquired Fox Restaurant Concepts in a deal. Now, they acquired this months before Rona. And then it was actually seen as this was a really bad deal at the time. Not at the time, but shortly after, a few months later, because guess what? Restaurants across the whole United States started being closed, right? Everybody had to close their restaurant doors. And then when they were allowed to finally open again, they were partially open. And so companies like Cheesecake Factory and basically anybody that operated restaurants took massive losses. And we know a lot of restaurants never recovered from that. Some went out of business during that year or the next few years, right? And so that was a whole situation. But this, in my opinion, will be seen as one of the best restaurant deals to happen in the history of mankind. And there's no doubt in my mind, because Cheesecake acquired the company for around $353 million. And considering what they got for it, they got 2 basically guaranteed banger concepts that are going to be expanded all over the United States of America. But then they got these other concepts that look like they're kind of next up. One is Blanco, which is a Mexican restaurant concept. Another one is Culinary Dropout, which is just a vibe, I'll tell you that much. And then they got a bunch of other concepts behind that they're kind of testing throughout different states and different cities to kind of see if those are next up, essentially, okay? Now, let's not forget, we just went through all those exciting growth opportunities, but let's not forget the cash cow. It's a Cheesecake Factory. It's one of the most successful restaurants in the history of mankind. One of the most successful sit-down restaurants in the history of mankind is a Cheesecake Factory. And it's an absolute cash cow, right? And so we're getting a cash cow business, an ATM machine, which is a Cheesecake Factory, and then we're getting all these successful growth concepts coming behind us, essentially, which is just beautiful because you don't get this with almost any other name. You know, you think about the Cavas and the Chipotles and the Bros and all those, right? They're one-trick ponies. There's nothing wrong with that. It's just, it is what it is. I'm getting a much more diversified business here with Cheesecake. Much more diversified. And I don't have to worry about massive losses like some of these companies have. I got a cash cow of a business to fund the expansion of all these other brands, which is just a thing of beauty. But that might not be the best part. Look at this. This might be the best part. The company is still cheap. The 4P on cake is 15. Come on, man. Like, think about how much growth this company is going to experience over this next, 10 years. We could think about just the next 5 years. Think about how many new locations. They're talking about 25 new locations this year across their concepts. Don't be surprised if they could push that number to 50 to 100 over the next few years, right? My gosh, what an opportunity. What an absolute opportunity. And at a 15 4P, it's just far too cheap. Far too cheap. There's no way with this sort of growth for the next 5-10 years and how many restaurants they should be able to add, they should be trading at a valuation of 15 4P, man. That's just laughable, right? No, another beautiful thing in regards to Cheesecake is they pay sweet, sweet dividends. So this is a public account. Just received these dividends a few days ago, $861. And remember, I own Cheesecake Factory in basically I think about almost every single portfolio of mine. And so, across all my portfolios, I own Cheesecake. Dividends just pouring in. And then you can take that dividend money and go buy more stocks with it, right? Which is absolutely beautiful. You can buy more Cheesecake if you want, which makes even more dividends, or you can buy other stocks. It's beautiful. So that's Cheesecake Factory. That was stock number 2 of these, stock number 3 of these 4 stocks. And time for stock number 4 of these 4 stocks, and that is Nike, ticker symbol NKE on this one, $61 stock. Nike's a fascinating one because you look at this one, stock price down 37% over the past 5 years. I'm buying shares left and right for the past few months of this one. And I think Nike's a really good case study of when a high valuation meets dumb decisions by a CEO, right? So to explain the story a little bit, basically there was a gentleman who got brought in to be the CEO of Nike many years ago, right? And this man came from the consulting world. He didn't really have much to do with Nike ever, pretty much at all. He was from the consulting world, more like, and helped another company run that was basically just a kind of a software kind of related company that was going to grow no matter what. And Nike brought him in, made a really bad decision bringing him in. He made a lot of dumb moves, like getting away from retailers and just like bad decision after bad decision after bad decision, right? And also at that particular time, if we look back at this company 4 or 5 years ago, it traded very high valuation multiples. And so when you get a CEO that makes a bunch of dumb moves and you got a super high valuation on the company, it's going to set your stock up for a massive crash. And that's exactly what we've seen play out the past few years, is a massive crash in regards to stock. But Elliott Hill has come in, and thank goodness the man is coming in and fixing the day. First off, he's getting Nike back to the roots of his company. He's right-sizing the workforce, which means just a fancy way of saying he's had to fire a lot of people, right? And that's going to help margins immensely over the next few years. That's going to help the company run, honestly, much more efficiently. Sometimes these companies, out of so many employees, they get way bloated. They become bureaucratic. They move slow. It's like, look at Meta. Meta's way better run now after they fired all those employees back in 22, 23, right? They fired so many employees. They're way better run. They move way faster. They innovate way faster now than back then. And I think the same exact thing I'm seeing starting to play out in regards to Nike. So he's right-sized the workforce. He's focusing the company on innovation and the brand, right? Which is what makes Nike magical. And he's also fixed the retailer relationships. So you look back to the consulting day guy that came in, those consulting guys, all they do is know how to run numbers, right? So this consulting guy comes in, runs a company, is like, oh, you know what? We can make even more money, even more margin if we just make everybody go to Nike.com to buy their stuff or use a Nike app. Well, guess what? Not everybody's going to go use a Nike app. I use it. I buy stuff on the Nike app, but I'm one person. That's not how a lot of people like to shop. A massive amount of people still like to go to a mall to shop. Mall. If they didn't, all these malls are out of business already. Malls are still very popular. There's several here in Vegas. Some are on the strip, some are off the strip in the suburbs. They're very busy. People still like to go to Foot Locker. People still like to go to Dick's Sporting Goods. People still like to go, I don't know, what is it, Academy Sportswear or whatever it is, right? Champs. People still like to go to physical stores to buy products. And people like to go to different websites to buy products. If you think everybody's just, going to specifically go to Nike's website and app, no, some people will do that, but not everybody. And so this consulting guy comes in, runs numbers, and it's like, we could make even more margin if we just force everybody. That's not the way it works. And so what happened was other retailers started to platform other brands. Hoka, On, blah, 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 all the other brands. Because they're like, well, Nike's not giving us the product assortment we need. So we're going to start. And then you start hurting your brand because now these retailers are going to put other brands on, right? So now you just hurt your positioning. So Elliott Hill is basically reversing all the very, very not intelligent decisions the consulting man made, which he made a lot of very, very bad decisions, right? And you see something like what Elliott Hill just did here, right? Nike to sell products on Amazon following a 5-year absence. Yeah, Nike hadn't been on Amazon for 5 years in terms of having their own store on there, right? Dude, you got to be on Amazon. Come on, man. It seems like everybody shops on Amazon. Like, in this day and age, you got to be on Amazon. And so Nike's now going to be on Amazon, and I'm sure that's going to help their revenue growth immensely next year in 2026, right? And I'm sure it will help their profits as well. And so Nike's not taking the standoffish approach of like, we're not going to give Foot Locker as much inventory and all the sporting goods stores and Amazon. No. They're taking the approach of like, we're going to make sure we give these retailers great products so they can make a lot of money. And at the end of the day, here's the deal. When Foot Locker makes a bunch of money, Nike makes a bunch of money. If Amazon's selling a bunch of shoes, a bunch of Nike shoes, guess what? Nike's going to make a bunch of money off that. Bottom line, okay? Now, here's kind of the timeline of where I'm at in regards to Nike and how I see this game playing out. The end of 2025, the company's going to get back to revenue growth. I think you'll actually start to see some revenue uptick the very end of this year, okay? And I'm talking about calendar year in regards to all this because the Nike's fiscal year is like a weird thing. I'm talking about calendar year, okay? 2026, I think we're going to start to see major margin earnings per share growth in calendar year 2026 for Nike. Like major. Not going to be small, monumental, okay? Also in 2026, calendar year, I believe we're going to start to see double-digit revenue growth again. Baseball partnerships are getting in good. They're going to have easy comps because the comps, especially in this front half of 2025, are just going to be cake to comp against, essentially. And so, boom. And then how I see this thing kind of playing out a little longer term, if we're talking about calendar year 2027 through calendar year 2030, is I think that Nike will eventually get to kind of just like a 5 to 9% revenue growth per year with double-digit earnings per share growth per year, essentially, which is beautiful, man. Beautiful. And that will get Nike stock eventually back to $100, and then we could be talking $150, and then hopefully blown to all-time highs of like 200 plus. So it'll be a multi-year time period, but keep in mind a lot of the gains in regards to Nike could easily come in the next, like, we can call it 6 to 18 months. And the reason being is if you think you're going to be able to wait on a Nike until everything's perfect and the sun's shining and everything's great and everybody's optimistic, dude, by that time Nike could easily be $120, $150 a share, $175 a share by the time everything looks perfect again. Because what's going to happen with Nike is as the story gets better and better and better, right? More and more investors are going to buy in. And then more and more people are going to want to hold their shares and hold their shares and hold their shares. And so you get more and more buying pressure, not much selling pressure, which makes the stock go up and up and up. So that's why I've been positioning in this one so aggressively, because I am of the belief that what I have here is going to play out. And as the story plays out, the stock is going to increase rapidly. And by the time everything looks great again, right, in 2027, 2028, 2029, dude, the stock's already going to made its massive run. And by that time, we'll probably be talking about there'll be smaller gains left in the stock. That's my belief on what will happen here, okay? Appreciate you guys for joining me today. I hope you enjoyed today's video. Once again, if you're looking to apply to our private stock group, private wealth group, that will be the pinned comment down there. You can click on that, fill out a form. We see if we get you access to that at some point here in June of this year. And yeah, let's get you up to a much higher level than where you're at. And then we'll send your Steel membership cards in the mail. 1000X1, woo, baby. And private stock group one as well. They're beautiful. Put those in your wallet. Bust them out on a date. Woo, woo. You'll be looking good. Much love and have a great day.